Good morning, everyone. It is this February 22nd. I almost said December. Man, I want this year to
Oops.
go by quickly. It's a repeat. It is February 22nd. This is Nadex Morning Analysis. I am Todd Rich with Nadex. With me, as usual, my good friend Brian Caprice from Keep Trading Simple. Before Brian and I talk about a couple of hot spots in the markets today, what's going on and what we might want to be looking at this week, I do need to first share this disclaimer that trading involves risk and may not be appropriate for everyone. That any trading decisions you make are solely your responsibility and at your own risk. And then this is an educational session. Please do not construe anything Brian or I say as a buy or sell recommendation. We are doing this for your educational purposes. So, with that, a quiet weekend, not a lot of news. Let me slide this over here. The U.S. equity markets all opening lower. Definitely soft here on the open. We're going to talk about that. And we're seeing some strength in gold. So I think those are the two spots we want to talk about. Probably people positioning for what they're anticipating to come up this week. So really no specific news now, but we got some things where people are probably getting ready, maybe taking a little risk off. So Brian, you want to kick us off here?
Yeah, so not a crazy Sunday in the Monday night of trading. So good data out of Europe today. The German business info client was good, and we expected there to be, a positive, and it actually came in much better than expected. And, the euro obviously spiked about 50, 60 pips in the overnight. So that was a good one. We are seeing, obviously, the indices soft. Here's why. There's actually, they're talking about it. Basically, higher interest rates driven by inflation expectations is forcing adjustments in equity markets. The S&P is the gap lower, following slides in Asia, Japan, and the Taiwanese indices. So pretty much everything across the board. And again, it's strange because lately we haven't heard anything about it. And now it's like, oh yeah, inflation expectations and recovery, and this low rate environment that we're hearing about. And what are we seeing? As soon as you mention the I word, we have gold moving. And again, here's the gold chart that we've talked about over the last couple of days, really. Now, late last week, about this zone, basically between 1792 and 1796, being an area that, although sellers had stepped in and asked, we really weren't confident that it was going to be able to hold again, because again, one hit, maybe a potential 3 if you wanted to count it, but here's definitely number 3, and then number 4 is the magic number. And as you can see, not only is the fundamental news about inflation creeping back into the market affecting this, but on a technical basis, it's also hit this level 4 times. And again, what did it do? It pulled forward, it pulled back into the zone. And again, if you wanted to reflect down to really grab kind of the meat of it right here, right, the meat of the basing and the meat of the test, see that we pulled away, one candle base pullback, Harry Potter trade, and it already started to take off. And again, I could adjust this down. Yeah, we could adjust this. The 3 to 1 would be right there. So you've almost already hit your 1 to 3 morning. So I think that this will be something to watch out for. See how this zone reacts today. This could definitely be something for more of a bigger bounce. And why I like this and I'm excited about it. Again, it's Monday. There's not always not many people are excited for it to be Monday, but looking at the way that this hourly can not only skyrocketed forward, but came right back immediately, typically is a telltale sign that there's not many sellers sitting up there until we get up into at least the 1813. 1796, kind of where we are right now, right? Up to 1813 is a pretty decent trade as far as gold goes. And again, that's some pretty nice opportunity, because we're not chunking through a whole bunch of kind of small areas of supply. It's literally a quick up, quick down, and again, there's a level sitting right up there at 1814. So that's something to watch out for today, particularly when the retail trader says, "Wait, inflation? Oh, we need to buy gold."
Right. So let's actually, what could people potentially do? I'm going to let's get this out of the way here first, just so we get a little bit bigger chart. I'm actually going to even zoom in a bit. Let's make this bigger so people can really see what's going on in here. One way to do this, knockouts. As you can see, we're right here around. It's just right around this 1800 level. I probably have this drawn a little too thick right now, but that's right where Brian's talking about it. And if we're looking for this thing to push higher up into this 1815-ish level, we also have that level up above. I mean, that 1830 was one that held for a long time. So there is some places where this could potentially push to the upside. If you can look at some of these knockouts where you've got there is one down here. There's still there is some risk to the downside. Let's actually take a look. What do we got in call spreads? I just wanted to show you where our highest knockout, the one with the lowest floor was. If you wanted to try to play this to the upside. Let's jump over commodities. Let's go over to gold and take a look at what we've got here in the call spreads. So yeah, there is there's some call spreads in here where you could play this to the upside as well. I mean, we're just into the range. But it's just these are ways, and if you're not familiar with call spreads or knockouts, please check out the education we've got on Nadex.com. But it's a way to, other than binary options, to take a directional play in the movement of the underlying asset. Of course, with knockouts, you've got hard, rigid floors and ceilings. With call spreads, it's there's optionality in it, but it is a way for you to try to play this to the upside. So I would say take a look at the knockouts and call spreads in gold for today. The other thing I think we were going to bring up today, let's talk a little bit about what's going on with U.S. equities, because we are opening lower again. Not a lot of news, but probably people just taking a little bit of a risk off before Powell speaks tomorrow.
Yeah, I mean, that's definitely two things I want to highlight on that one. One, tomorrow morning at 10 a.m. is the first day of 2 of testimony from Powell. Again, they're going to one way or the other about recovery, interest rates, everything out there. The last we'd heard from Powell, they were talking about how we're not really seeing inflation. This is normal growth, but again, normal growth in a pandemic, it's kind of like the deeper we go into kind of vaccinations and lower rates, saying that this is normal when we're in a pandemic situation is kind of crazy. People are going to start thinking about, hey, listen, are you going to start raising interest rates? Because if inflation is creeping in now under these conditions, and on top of that, we're talking about the first vote of the $1.2 trillion stimulus coming in this. It's like, hey, if this is normal, markets are highs, we're seeing good numbers, and we're throwing in $1.9 trillion on top of it. Again, that's kind of a situation where inflation is coming in, and the first thing they do to combat inflation is raise the interest rate. Raising the interest rates typically sends the market spiraling back down again. That's kind of the big, currencies, you raise interest rates, it's a great perk. Overall indices, you raise interest rates, it's a quick little right down the drain, very, very fast. That's the way to kind of curb those things. So that's what we're seeing right now. And again, that's gold. Let me go across the NQ. Here's a 4-hour chart for NQ. And again, we don't talk about the 4 hours too much because we're focused on kind of more intraday trading. But one thing, and it's an area that we talked about last week, you can see this rally base, a nice pop, and one retest. Oops, I forgot. You guys can't see the cursor on this one. Right there. You can see they had the test of this level right here. And basically in the last 12 hours, we had a drop down and kind of a stabilization point here. So it is an interesting level. And like I said, this is what it looks like on a kind of a smaller kind of time frame. Whoops, let me grab this one right here. You can kind of see that not only we hit that level, and again, it was an hourly and a 4-hour zone, we kind of balanced and popped up again. So one of those areas that could offer a potential level of basically support, right? As demand, buyers step in. The caveat to this is all the news we've seen so far is everything's slumping, everything's going to drop and be slow. The retail trader has not gotten an opportunity to react to that. So the big question is can we hold, or are we going to see a push down into this level deep and then have a 10 o'clock somewhat of a reversal is what could. Because again, once everybody knows you got to go short, that's when the price kind of a rebound. But this is what we've seen from the European Open down as overseas markets were weak, inflation, raising interest rates. Now it's our turn, and again, are we going to be the last people at the party is kind of is the big question. So I think 13,370 is a decent level to kind of watch out for. And again, right now we're kind of getting a bounce and a little bit of a brawl, but this could easily push right back up into this 13,600 range, or even again 4-hour basis. You can see the next time we hit anything below is about 150 points down at the 13,240-ish level, where we have this level sitting right. This level sitting right here.
All right, so let me just drop this in over here on the Nadex chart. Here I've got binary options up here. Yeah, we are seeing weakness here. I mean, clearly the Nasdaq's in the grander trend of things. We can see it's been trending lower, but overnight, it does take a hit. Nasdaq is one. It's been bearing the brunt of this a little bit more than the other indices. You're not seeing quite the spike down in the Dow or the S&P, although they are each lower. But we have hit this level down below where buyers have stepped in the Nasdaq, and it's sort of chopping sideways here, waiting to see what the retail trader does this morning. So this is one to watch. If this level holds, there might be an opportunity for to catch a bounce in the Nasdaq. If it breaks through, it's just one to sort of watch. Definitely one sort of watch. It is at an interesting level here in the Nasdaq. All right, but with that, Brian, anything else that you wanted to talk about this morning to get people ready for the open in just between 15 and 20 minutes? We did gold, we did Nasdaq. Is there anything else you'd like to throw out there quickly?
No, not really. I mean, the only mover that we've seen really in the overnight has been in the euro, and again, a lot of that is coming from some saw. Obviously the business climate is one of the big things out there. With that said, I'd say there's probably somewhat of a reversal. The last 6-7 weeks we've seen basically how we roll into the morning with the dollar, which I would say is probably more dollar weakness. That tends to reverse and shoot back up again. Interest rates going up are bad for the overall indices. They're for gold, but they are also good for the dollar. So if retail traders come in with a strong mindset, hey, listen, we could start talking about raising interest rates, that could lead to a reversal and a drop in the euro dollar, the pound dollar, and the Aussie dollar all across the board. And again, the dollar CAD may be also continuing to rise up. So there is some other opportunity out there as well. It just, again, it's that first 30 minutes is going to tell us where the rest of the day is going to go today.
Excellent. All right. With that, we gave you some things to be looking at today. Brian and I will be back tomorrow morning to do this again. We'll be teeing you up, and that will be before Powell speaks. So we'll definitely look for some setups before he gets on tomorrow morning at 10 a.m. Eastern. So tomorrow should be an interesting day. In the meantime, you've got some things to be looking at today. You got any questions for Nadex? Please email us, customerservice@nadex.com. Any questions for Brian? He is also very accessible. Please email him. He interacts with you guys quite a bit, and I know he enjoys it. You can email him at support@keeptradingsimple.com. And with that, I want to let you all get ready for the exciting Monday here. We are soft again on the equities across the board. We'll see what the retail trader has to say about that in about 17 minutes, and want to wish everyone good luck in the markets.